Let's try and understand this a little bit better. We've got Vivek Partheeban, the COO at Caplin Point, joining in on the show right now. Vivek, hi, morning. Good to have you on the show today. Wanted to understand how significant is obtaining this approval from the Brazilian regulator for your approvals, because the market has really been cheering this.
Thank you. Obviously, Brazil is an important piece for our overall growth in LATAM, especially as we move away, or rather, I would say, grow into the larger markets of Latin America, such as Brazil, Mexico, Colombia, etc. As you know, as a company, we have a large exposure to LATAM. Close to 82% of our business right now is from Latin America, and Brazil being the biggest market over there, this inspection gives us access to that. So indeed, I think it's an important milestone for us. But what we do going forward is going to be important, because whatever products that we are developing for the US and EU and stuff, we are going to be extending into Brazil as well from here on.
What's the revenue size from this market specifically?
So without getting into specific numbers, let me say that Brazil by itself is by far and away the largest market in Latin America. In fact, it is 10 times the size of all of the other markets that we're in put together, So obviously, it also comes with its own set of complications. Brazil has historically not been a very favorable market for Indian companies, but so hasn't been Central American countries as well. But we've been successful over there. So we feel that with the right kind of products, with the right kind of partnerships over there, we should be in a position to do well. It will probably take a few more quarters from here on to start seeing something a little bit, a little bit substantial from there.
Talk to us about what are the other interesting drugs you're working on, which is in advanced stages and may come online next 2 to 3 years. If you can give some visibility around that.
Yeah, so we have already about 24 product approvals out of US at this point, and the idea is to try and extend this to other markets ex-US as well. Now, we also had a US audit that ended with no observations at all just prior to the Brazilian audit, and this was very specific towards complex products. We've been developing and filing injectable suspensions, ophthalmic emulsions, all of that. So this US audit was very specific towards that. We feel as we migrate away from simple solutions and then get into slightly more complex products, the price realization and also the competition is few and far between. I think that will bode well for the company in the next few years going on.
Right. Interesting. How is can you talk to us what percentage of your business is now still negative cash flows? I remember a few years back, your business model was, the one thing which stood out was that you took advances and cash flows first, and then of course supplied and the retail part of your overseas business. Can you tell us how do the things stand right now?
No, that was a long time ago. Yes. We never designed for our business model to be a negative cash flow working capital cycle. I'm not even sure if there's too many companies in that manner. But obviously, what has happened is over a period of time, we've been acquiring all of the distribution networks that we were working with. And whatever you see in terms of inventory that's on our books, it's actually not inventory that's sitting in our factories. This is inventory that is actually next to the customer, which is very important for us because our sales happens on a daily basis. It's not that we have shipments going out at the end of the month and then we're waiting for collections. Our shipments go out every month, but our sales happen on a daily basis. So the inventory that you see on our books is actually getting liquidated on a daily basis, So those are the things that have changed. Of course, we have significantly grown from 2016, 2017 period when it was a negative working capital cycle. I think we are more than triple the size when it comes to revenue. But of course, our cash flow has been very good. I think when it comes to benchmarking, I think we are probably one of the best when it comes to companies our size. We don't have any debt on our books. In fact, for a company that's done around 1,700 crores in sales, we are sitting on close to 1,000 crores of cash and another 800 crores of liquid assets. So I think that's a commendable position, and negative working capital cycle was never designed to be that way. It just sort of happened, but we've become a little bit more of a normal sized business right now.
The other thing, Vivek, I wanted to understand as well is, what are the other newer avenues that you're currently looking at? Because we understand that there are a lot of, newer opportunities you're scouting when it comes to fill and finish peptides, biosimilars, other niche products as well. Give us some kind of, color and what is the new product profile going to look like?
Yeah. So I think one of the major drivers of growth that we're aiming at from here onwards is going to be in oncology space. We have already completed phase 1 of our oncology facility. We're in the process of finishing up phase 2, which is going to be into injectables. So that is happening at a good speed right now. We're also evaluating dedicating a separate line for fill and finish because that's going to be into biosimilars. We don't want to do it from scratch because you need very, very deep pockets for that. So we want to try and establish what our strengths are, which is going to be in this sterile product manufacturing and also marketing of this in faraway places, right? Like sort of roadless travel spaces. So we want to work to our strengths when it comes to fill finish, when it comes to oncology space, etc. So we're also aware that we're sitting on a significant amount of cash. So we are not against doing something inorganic as well. But it has to really fit in with our line of growth. We're not really active at the moment, actively scouting at the moment. But if it so happens, it has to really fit in with our benchmarks. It has to fit in with our line of growth. And even if it is something in the domestic space, we're not against it.
Interesting, I'm assuming that you've already started working in that direction. What kind of categories, what kind of therapies are you looking at? There's a lot of M&A happening already. Mankind just bought out Bharat Serum. What would your, what kind of a company would fit your bill?
Yeah, we've always been very interested in the distribution concept. We've, whatever little we are today, I think it's because of our progress in distribution and getting to the last mile, sort of eliminating the middlemen, So anything that fits in with that line is going to be something that's important for us. Whether it's a distribution network that is in Latin America, whether it's a distribution network in the US also. And finally, the one piece that we've not had any presence recently or in the recent past is the domestic piece. But it needs to be something that is well managed because as a company, we are still sort of thin when it comes to management bandwidth, So we don't want to bite off more than we can chew. So we continuously evaluate opportunities. There are many that come to our table, especially given the cash that we are sitting on, etc. But I wouldn't say that we are very close to anything right now. We have plenty on our plate that we need to really stabilize before we go after the next large move.
Just one last word from my side, Vivek. You're roughly 2,000 crore top line, we're 30-33% margin company right now. With this acquisition, or with your organic growth, next 2 to 3 years, what kind of top line number internally you guys are targeting? If you could share some broad visibility on that.
Yeah, over the next couple of years, we feel that we will grow at similar levels to what we've seen in the past 2 years. But 26, 27 and beyond looks to be something quite exciting. That's what we feel internally, because by which time our US front end would have matured. Our Mexico business would have matured. Whatever business that we are targeting out of Brazil will start to kick up some steam. And, our oncology facility also would have started to generate adequate cash. So I feel rather than the next 2 years, I would look at 3 years and beyond. And in pharmaceuticals, obviously, it always takes a little bit more time because of the gestation period. But I would say 26, 27 and beyond looks very much an exciting period for us.
Okay, and good luck with that, Vivek. Thank you so much for speaking with us today.
If you like this video, then like, share and subscribe to ET Now.